Another day and futures are preliminary slightly up for the day, guys. 13 market moves data for May 20, 2020 points to an increase in development of this divergency that we've been noticing pretty much across the board at this point in multiple sectors, multiple charts, multiple indications, and the market continues marching on tiny volume. Now, 2.1 million job loss today, plus multiple bankruptcies that are popping up like mushrooms freaking everywhere, okay, does not stop the market. But the key importance here is not quite yet. The market is not going to be able to continue going on this low volume consistently over the next few days. We will get a sharp breakdown. That's what a behavioral move 6 points to. Now, the tech sector plunge that was paused yesterday, okay, is the Fed buying again? And the question is, if it is, then how much longer it's going to be able to continue doing so? So the response to the 2.1 million job lost, nothing new. The market is naturally not reacting as we've observed the behavior over the last 9 to 10 Thursdays now. It used to drop and then bounce. At this point, it's not even dropping pre-market after this job loss because they're focusing on the improvement of the ratio. So we went from initially 3.9 million to 5.6 million to 4 million to 3 million. Now we're in the twos, second consecutive Thursday in the row. So the market is interpreting this as a positive thing. However, this trend could easily spike going into the next few weeks. And if we see an increase in that number, then it's going to cause some major headwinds. For today, though, focus on sideways trend, and there is one particular area I'm going to show you on the chart. If you just focus on that, guys, there's a ton of opportunity for plenty of day trades that you can take today, and that is definitely just shorting the bounces, guys, intraday. Now, the move 6 is likely to continue to be the predominant move in the market, so if you focus on the move 6, again, I'm going to show you the chart in just a second. You're going to do incredibly well. So, but the key idea is now, on top of everything that we've pointed out in the last few videos, we officially get a divergence on the VIX. So, pre-market, yes, market is slightly up. The futures are up a few points, but so is the VIX. So, typically, we shouldn't see this type of situation unless a leg lower is about to be created in the market. So, the top trades for today, nothing has changed really, guys. You want to stay short of BKNG at this point as our favorite trade. NVIDIA is still a great trade. LR6, all these trades that we've been talking about in the last few videos, guys, they're very valid trades. The way you make money with them is by shorting the bounces and focusing on your entries. So if there's anything you're going to take from today's video, guys, I want you to focus on the bounces over the next 72 hours. If you focus on shorting these bounces right here, you will do very well in this market environment because it's highly predictable right now. So to help you translate this picture I just shown you on the chart, this is how the bounce looks on the chart. And what I'm talking about is the 1 day, 1 minute chart. So if you pull that up on your screen, you're going to see that intraday bounces, when things bounce like this, that's when you want to get in. That's when you want to get into puts. What I've discovered a lot of traders are doing, they just put it on the position and they're waiting forever. Well, that stuff is not going to work when the market is overall going sideways. It drops, it bounces, it drops, it bounces, it drops, it bounces. So your goal is not to just target every move of the bounce. In other words, you don't want to be shorting, then collecting here, then reversing your trade to the call side, then reversing it again to the put side. It's going to drive you nuts to do that. Okay, instead, just use one strategy. When the market bounces, it's going to drop. So you can collect. Then don't get on the call side. Just wait till it bounces again and then short it again. All right, so it's a very easy strategy. Anybody can use this, okay, especially if you're trading options on futures. It's super easy to do. So overall, with this is what we're expecting. So far pre-market, pretty much this is how things are looking pre-market. We're up, down, up, down. This trend is likely to continue. But based on the 5-day chart, based on the 10-day chart, guys, this is what we're noticing, this behavior of a sell-off into the close. It pretty much happens with every third day. So if you focus on this behavior, yesterday we got a bounce into the close, giving us a higher probability of a sell-off going into the close today. So technically the 2.1 report job number, it's not a great thing, but the market is not interpreting it yet as a positive thing. But towards the end of the day, it can easily rethink its stance, and analyzing the data over the last 10 Thursday to Friday to Monday action, market peaks on Thursday and it works slowly its way lower, with the exception of that one Friday where the futures popped like 400 points on the Dow. So there is a predominant evidence here that the market will set a peak today from which it will move lower. So the peak could easily be at like 3,050 level, 3,055. Use that as your area. We're likely to bounce there multiple times. Anytime we get close to that, or like 3,045, 3,050, just buy puts. When the market goes lower to like 3,030, 3,020, collect some profits, expect to bounce until going lower into the last part of the trading day, expect a bigger move lower. All right, so pre-market behavior, guys, looks like this. Okay, so we're pretty much trading a tight range between this 3,030 and 3,053. That is likely to be continuing throughout the day, but based on some other charts I'm about to show you, it is likely to break lower going into the last part of the day, and I just want you to be ready for it. So the next market move, based on our observations, is going to be 211.06. If you take a look, okay, we're still on track for our historical charts that we're using to calculate this. So a small overshoot was something we discussed in that long video that was over an hour long a couple of days ago. So right now we're going through that overshoot. But at this point, it doesn't appear like we're actually even going to go to the level of 31.31. It looks like this 3,050 level is most likely to be the ultimate level from which we're going to work our way lower. Now, the reason why we're believing it's a 2, 6, or 11 type probability today, if you look at the history of last Thursday, specifically for May, you got a red move on Thursday, red move on Thursday, green move on Thursday, and another red move. So out of the last 4 moves on Thursday, 3 of them were red. And considering the divergency on the VIX that we're observing and the key technical levels on the charts, guys, there is a higher probability of a red day rather than the green day. Overall, the sequence is pointing, when you get a 6-7, guys, as you can see, we just had the similar setup last week. 6-7, it results in a red move. 6-7, it doesn't guarantee we're going to get a 2, but I think there's a higher probability of a 6. Anytime you get a combination of 11 and 6s appearing too often throughout the month, it points to a top information in the market. And so the break could come rather unexpectedly and rather fast. So as the complacency overall with the time clock proceeds, okay, and despite of getting this crazy dramatic move yesterday in the move 7, overall it was a positive move because we gapped up higher, okay, we dropped. In a lot of move 7s, you don't go negative. But in some dramatic move 7 formations, you will temporarily go into the negative territory and you can bounce out of that. So that's exactly what happened yesterday. It's not a typical move 7, but it will happen on certain instances. So the bounce was rather strong, and overall we ended up finishing in the positive territory. But what is unique about this characteristic is look at the time frame of the sell-off. So the major sell-off happens within an hour and a half, and then it takes the market to pretty much gain its posture for the rest of the day. So we got a ratio of quick sell-offs in relation to the market taking much longer time frame to climb back up. That is why the strategy of shorting the bounces makes sense, because if you short the bounce, you're likely not going to have to wait as long for that move lower to come through. Now, if you play in the call side, you will have to sit with your positions, and if overall you're going sideways in the market, then you're not going to make any money on calls, because overall the options are going to be decaying much faster in relation to the time frame, especially when you're dealing with weekly options. So remember this ratio, right? It takes 1.5 hours to drop, and then it takes 4 or 5 hours to climb higher. That's why you want to short the bounces, because when these bounces happen, okay, the move to the downside is going to happen within a much shorter time frame. And if you take a closer look, right, we'll take a look at the 6-7 sequence real quick. Okay, remember how this move 6 plays out. Bounce, drop, bounce, drop, bounce, and the final drop going into the last part of the session. Look how quick these 6s happen at the very last part of the day. And then it takes us forever to climb back up here. That's after hours, that's pre-market, and finally we're here. Look how quick that move lower comes. Okay, so this type of behavioral characteristics are likely to proceed from here on. And the most important thing you should know as a short seller is that the magnitudes of these moves to the downside could also accelerate. The very characteristic that we've dropped so fast with an hour and a half yesterday and climbed over a much longer time frame, okay, creates a very nice setup for more of these things to actually happen over the course of the next 72 hours. If you analyze this 5-day sequence, 7, 2, 4, 6, 7, on the first side, it doesn't look bearish, but if you look under the surface of the chart patterns that are developing, they're very consistent. Look, so here's that 6 formation, right? If we just use the 48-hour cycle here, followed by a quick drop. You got another variation of this right here, followed by a quick drop. What we're setting up so far this morning pre-market is for another variation of this, which will result into the same formation lower. The question is, will it happen right before we close, before 4 p.m. today, or will it actually do this right after hours? So considering that these cycles are running between 24 and 48 cycles before this actually takes place, so if the market continues doing this, you can intraday trade just pretty much every bounce without expecting a huge drop until we go into the last part of the trading session and focus on keeping the positions overnight, because that cycle is going to carry on into the overnight trading, which gives you a higher probability that we can gap down tomorrow. So that's why on the calendar we have a higher probability of a gap down move 3 formation for tomorrow. Now, notably on the VIX, okay, despite of VIX sort of stalling out that 27, 28 area, the unique feature of the VIX right now is the market rockets higher, it bounces strongly, it finishes positive pretty much every freaking day. But VIX refuses to drop. Now, this is actually setting up a nice potential reverse head and shoulder in the VIX. And so this potential reverse head and shoulder that's developing around here, guys, could give VIX a really, really huge boost over a very short amount of time, which could easily coincide with these move 6 behavior, let's say going into the close or after market, where the VIX spikes hugely, kind of like what you see on this chart, it bounces strongly. With the exception, we're way overdue for reversal in the behavioral pattern on the VIX, meaning last time it gaps up higher, it surrenders the gains. Next time we're going to gap up higher on the VIX, it is likely to actually hold the gains and move higher from there. So with that said, guys, use the information I've shown you here. Remember the picture, the bounces. Focus on shorting intraday bounces, particular in the technology sector. Trade like a rock star. Let's roll. I'll catch you in the next trade soon.